Corporate Transparency Act. Corporate Transparency Act fines entities $500 per day for late FinCEN reports. Hi, I'm attorney Richard C. Keat. My father and I have formed over 8,900 LLCs and 410 nonprofit corporations. We are business law attorneys, and we have over 230 five-star Google reviews as of November 10th, 2023. My dad and I are the owners of FinCEN Filer LLC, located at the following link. We formed this company to collect information about the beneficial owners of reporting companies and file the information with the Financial Crimes Enforcement Network, FinCEN, of the United States Treasury. The purpose of this video is to warn owners of U.S. companies and foreign companies that do business in the U.S. about a federal law called the Corporate Transparency Act of 2021. This law became effective on January 1, 2022. The CTA requires all reporting companies to file a report with FinCEN that discloses information about the reporting company, the beneficial owners of the reporting company, and the person called the applicant who created the reporting company by filing its formation document with a state agency such as the Secretary of State. The applicant information is only required for reporting companies formed after the 2023 year. Report filing deadlines. FinCEN report filing deadlines depend on when an entity was formed. Companies formed before 2024 must file their FinCEN report on or before December 31, 2024. Companies formed after 2023 must file their FinCEN report within 30 days of the date the company was created. If a reporting company fails to file a FinCEN report on or before the report's due date, FinCEN can fine the company $500 a day until the company files its report. Yes, the fine is $500 for each day the Corporate Transparency Act report is delinquent. The CTA also has criminal penalties of up to 2 years in jail for willful violations of the law. FinCEN estimates that 32 million U.S. entities are reporting companies that must file a FinCEN report in 2024. Almost all entities formed in the U.S. are reporting companies, regardless of when the company was formed. There are 30 types of entities that are not reporting companies and that do not have to file a FinCEN report. The following entities are exempt from filing a FinCEN report: securities reporting issuer, governmental authorities, banks, credit unions, depository institution holding company, money service businesses, broker or dealer in securities, securities exchange or clearing agency, other Exchange Act registered entity, investment company or investment advisor, venture capital fund advisor, insurance company, state licensed insurance producer, commodity exchange Act registered entity, accounting firm, public utilities, financial market utilities, pooled investment vehicles, tax exempt entities, entity assisting a tax exempt entity, large operating company, subsidiary of certain exempt entities, and inactive entities. Large operating companies. Let's talk about the definition of a large operating company. A large operating company is exempt from filing a FinCEN report if it satisfies the following requirements. Number one, the entity employs more than 20 full-time employees. Full-time employee means, with respect to a calendar month, an employee who is employed on average of at least 30 hours of service per week with an employer. Number two, more than 20 full-time employees of the entity are employed in the United States. Number three, the entity has an operating presence at a physical office within the United States. Number four, the entity filed a federal income tax or information return in the United States for the previous year, demonstrating more than $5 million in gross receipts or sales. Number five, the entity reported this greater than $5 million amount as gross receipts or sales net of returns and allowances on the entity's IRS Form 1120, Consolidated IRS Form 1120, IRS Form 1120S, IRS Form 1065, or other applicable IRS form. Number six, when gross receipts or sales from source outside the United States as determined under federal income tax principles are excluded from the entity's amount of gross receipts or sales, the amount remains greater than $5 million. Inactive entities. Inactive entities are also exempt from filing a FinCEN report. An inactive entity does not have to file a FinCEN report if all 6 of the following criteria apply. Number 1, the entity was in existence on or before January 1, 2020. Number 2, the entity is not engaged in active business. Number 3, the entity is not owned by a foreign person, whether directly or indirectly, wholly or partially. A foreign person means a person who is not a United States person. A United States person is defined in Section 7701A30 of the Internal Revenue Code of 1986 as a citizen or resident of the United States, domestic partnership, and corporation, and other estates and trusts. Number 4, the entity has not experienced any change in ownership in the preceding 12-month period. Number 5, the entity has not sent or received any funds in an amount greater than $1,000 either directly or through any financial account in which the entity or any affiliate of the entity had an interest in the preceding 12-month period. And number 6, the entity does not otherwise hold any kind or type of assets, whether in the United States or abroad, including any ownership interest in any corporation, limited liability company, or other similar entity. If your company is not exempt from the CTA, then it is a reporting company and must file a FinCEN report. FinCEN report contents. The reporting company must include the following information in its FinCEN report: company's legal name, any trade names, doing business as, or trading as names. The current street address of its principal place of business if that address is in the United States. For example, a U.S. reporting company's headquarters, or for reporting companies whose principal place of business is outside the United States, the current address from which the company conducts business in the United States. For example, a foreign reporting company's U.S. headquarters. Its jurisdiction of formation or registration, and its taxpayer identification number. If it is a foreign reporting company that does not have an issued TIN, a tax identification number, issued by a foreign jurisdiction, and the name of the foreign jurisdiction. Who is a beneficial owner? A reporting company's FinCEN report must contain information about every beneficial owner of the reporting company. A beneficial owner is an individual who directly or indirectly, through any contract, such as a trust agreement, arrangement, understanding, or relationship, or otherwise exercises substantial control over the entity, or owns or controls not less than 25% of the ownership of the interests of the entity. An individual can exercise substantial control over a reporting company in 4 different ways. If the individual falls into any one of the categories below, the individual is exercising substantial control. The individual is a manager of a limited liability company, even if the individual is not a member of the limited liability company. A trustee of a trust that owns 25% or more of an entity, or who has control of the entity. The individual is a senior officer, the company's president, chief financial officer, general counsel, chief executive officer, chief operating officer, or any other officer who performs a similar function. The individual has authority to appoint or remove certain officers or a majority of directors or similar body of the reporting company. The individual is an important decision maker for the reporting company. See question D3 for more information. The individual has any other form of substantial control over the reporting company, as explained further in FinCEN's Small Entity Compliance Guide. See Chapter 2.1 in that guide, What is Substantial Control? Beneficial Owner Information. For each individual who is a beneficial owner, a reporting company must include the following in its FinCEN report for each of its beneficial owners: the individual's name, date of birth, residential address, and an identifying number from an acceptable identification document, such as a passport or U.S. driver's license, and the name of the issuing state or jurisdiction of the identification. The reporting company will also have to report an image of the identification document that shows the identifying number in the document. Applicant information. Reporting companies formed after 2023 must include in their FinCEN reports information about the reporting company's applicants. A reporting company that must report its company applicants will have only up to 2 individuals who could qualify as company applicants: the individual who directly files the document applicant that creates or registers the company. If more than one person is involved in the filing, the individual who is primarily responsible for directing or controlling the filing. For each applicant, a reporting company must include in its FinCEN report the same information required of beneficial owners. Hire FinCEN Filer LLC to file a FinCEN report for you. If you are involved with the reporting company, it needs to file a FinCEN report to avoid the $500 a day fine. My company, FinCEN Filer LLC, can help. FinCEN Filer's business is collecting reporting company information, all beneficial owner information, and applicant information, and then preparing a proposed FinCEN report for the company's review, filing the approved report with FinCEN, and sending a copy of the filed report to the company. For more information, go to the following website and sign up for our free Corporate Transparency Act newsletter at the following website. Or you can send an email to info@fincenfiler.com. Thank you for watching, and I look forward to hearing questions on the Corporate Transparency Act.